Earlier this year, Transport Intelligence published a survey of the accounts of leading logistics companies, tracking their financial performance before, during, and after the economic downturn. A feature of the data which emerged was the strength of the recovery. Revenues of the companies surveyed in contract logistics, forwarding, and trucking grew by over 15% in 2010, and average operating profit margins grew from 2.4% to 3.3%. Our first chart shows TI's index of revenues for the contract logistics, forwarding, freight and trucking sectors. Total freight logistics revenues, the pink dotted line, grew by 15% in 2010 to a value slightly above 2007 levels. At first sight, this is very good, but it should also be noted that in real inflation-adjusted terms, revenues remained at or below 2006 levels, depending on the deflator used. We can see the freight forwarding sector, the green line, was the most volatile of the individual sectors, including its recovery in 2010, which was particularly strong. That was last year, so how is the sector faring in the first 6 months of 2011? We can see that the first half of 2011, this positive trend has continued, despite the economic worries and market jitters. Our chart provides a snapshot of the companies who have reported their first half results from a range of sectors. Most of those surveyed have seen significant positive growth, with the US companies' trucking operations doing the best. Forwarding operations have also done well, with revenues up in the high single, low double-digit range. This is particularly impressive given the difficult comparatives with last year, when logistics companies were enjoying somewhat of a boom. Turning our attention to profits, in 2010, trucking and contract logistics companies enjoyed higher margins, although this was not the case in the freight forwarding sector, where there was a squeeze due to higher air and sea rates at the end of the year. From this chart, it can be seen that the margins for contract logistics, freight forwarding and trucking have averaged below 5% for the past 5 years, and in 2010 averaged just 3%. Although this may be sufficient for a low asset operation, it may be inadequate for a logistics provider which provides a substantial asset base. Such companies need to make sufficient profit to provide funds for investment in new assets in the future. As well as this, several industry players have high levels of debt, and on present levels of earnings, the servicing collateral for this debt is insecure. There is no doubt that the industry needs to increase its margins in 2011, and our next chart examines whether they are in fact making progress in this direction. In fact, looking at a snapshot of 2011 first half results, it is evident that the industry as a whole is doing rather well across all regions. Companies across the board have improved their operating margins, with US companies leading the way. Even YRC Worldwide, a company linked for some time with potential bankruptcy, came closer to breaking even. It is perhaps very easy to get caught up in the negativity which at present is pervading the world's financial markets. For the time being, though, the logistics industry is performing strongly, and as a bellwether for the wider global economy, this is a very good sign.